Next to dual reporting lines comes individual objectivity, which is addressed by Standard 1120. Objectivity is a mental attitude that internal auditors should maintain while performing engagements. The internal auditor should have an impartial, unbiased attitude and avoid conflict of interest situations, as that would prejudice his or her ability to perform their duties objectively. Conflict of interest is a situation in which an internal auditor, who is in the position of trust, has a competing professional or personal interest. Such competing interests can make it difficult to fulfill his or her duties impartially. A conflict of interest exists even if no unethical or improper act results. A conflict of interest can create an appearance of impropriety that can undermine confidence in the internal auditor, the internal audit activity, and the profession. A conflict of interest could impair an individual's ability to perform his or her duties and responsibilities objectively. Practice Advisory 1120-1. Individual objectivity means the internal auditors perform engagements in such a manner that they have an honest belief in their work product and that no significant quality compromises are made. Internal auditors are not to be placed in situations that could impair their ability to make objective professional judgments. Next in line is Standard 1130, which addresses impairments to independence or objectivity. If independence or objectivity is impaired in fact or appearance, the details of the impairment must be disclosed to appropriate parties. The nature of the disclosure will depend upon the impairment. Impairment to organizational independence and individual objectivity may include, but is not limited to, personal conflict of interest, scope limitations, restrictions on access to records, personal and properties, and resource limitations such as funding. The determination of appropriate parties to which the details of an impairment to independence or objectivity must be disclosed is dependent upon the expectations of the internal audit activities and the chief audit executive's responsibilities to senior management and the board as described in the internal audit charter, as well as the nature of the impairment.